Hello, so happy you're here. We're going to go over the 2024 Wealth Planner today. So, this is going to serve as a tutorial, or if you're thinking about buying it and you kind of want to see how it works first, this video should do the job. When you open the file, it's first going to prompt you to make a copy. Now, I already have my copy here, but it's going to basically say, do you want to make a copy of this file? It'll ask you to save it to your Google Drive, or if you download the Excel version, it'll save as a file to your downloads folder or wherever else you choose it. Now, upon opening the file, this is what you're going to see. This Read Me First tab, this is where you start. Now, if you've used a wealth planner in the past, you probably know that there used to be like an instructions tab and then a dashboard tab. We've combined them this year, so it should be a little bit faster of a process and hopefully will move you through this setup phase even quicker. So, first things first, big shift in the beginning. What month do you want your wealth planner to start? Now, when we launch this every year, it's always on Black Friday. So it's the end of November. Usually people get excited. They're like, I want to start in December. I want to get that momentum going. Well, in the past, every wealth planner had to start in January. You didn't really have an option to start in December, and it would actually take quite a bit of work to move the tabs around. So now, the first decision you make when you open your planner, hey Sam, is what month do you want it to start? So it's defaulted to January. We're going to pretend we're starting in December as though we're buying this launch weekend and we want to get going right away. So the very first question that you answer about your own financial situation is about your income tax liability estimate. So when you're starting, you're going to select single or married filing jointly. Now, we don't have a married filing separately option only because um, it's a very rare filing status. I would say if you do file separately, you might want to use the single option as that'll probably be closer. Hopefully, you're one of these two. So, married filing jointly, let's say we both make a median income, so our household income is 120,000. It's going to immediately start breaking things down for you. So if you are making paycheck contributions, you're going to enter those here. So maybe you are contributing to a 401k, maybe you're contributing to an HSA. Maybe you spend $400 a month on your pre-tax medical care or your other benefits, right? So you're going to put here, maybe we've got like 25,000 total across all contributions and benefits. It's going to tell you your estimated reported taxable income. It's going to automatically apply the correct standard deduction based on whichever option you choose. We're 2 months exactly out from launch today. Today, as I'm filming this, is September 24th. We don't yet have the IRS's data for next year and what the standard deductions and brackets will be. I still have to update this once we get those later in October, but right now it has the 2023 numbers in it. It's applying the standard deduction for married filing jointly. It's telling you what your estimated federal tax is, your marginal federal rate, your effective federal rate, your effective FICA tax rate, and estimated FICA tax liability. The other thing to note is that if you have a state tax that you have to pay, you can also put in your effective state tax rate here. Then it's going to tell you, okay, between the two of you, this is your average estimated monthly take home pay. So it's really just trying to paint a picture of where your money is going before it is even coming to you. Something to note right away, your cells in this planner that you're going to enter are all the white ones. If it's blue, you don't touch it. There is a formula in it. The other thing to note is that if you hover over cells that have these little black tabs in the corner, it'll give you a little more information. This, for example, marginal federal tax rate. It's going to tell you, okay, this refers to the bracket you're in, but this is only the bracket that affects your highest taxed income. Whereas, like your effective federal tax rate is that this is the rate as if you took the tax you pay as the numerator over your income as the denominator. It's the effective percentage of your income that you're paying in taxes. All that to say, those little notes are throughout the planner. So if you're confused, typically that feature, you can hover over it and it'll give you a little more information. So once we have our estimated average monthly take home pay, it kicks it down here to your ideal monthly budget breakdown. Now, this is an estimate. It's possible based on your deductions, your tax credits, how you're filing, other factors, that this might not be super accurate, right? Because you're telling it what your annual gross income is. But if there are factors that wildly skew what you actually take home, this might not actually be accurate. If you want to put a more accurate number there, if you know it's off and you know why it's off and you want to put a different number in, feel free to do so. We left that cell white on purpose, but then it's going to give you an ideal monthly budget breakdown based on that take home pay. So it's going to say, okay, for your housing costs, try to keep them all under this number. For your transportation costs, try to keep it all under this number. Other living expenses and fun stuff. And if you scroll over those, it's going to tell you a little bit more about why those are the data points it's suggesting. But then you've got your total spent, and then the money it's suggesting every month you should put toward saving, investing, or debt pay down. So it's just broad parameters that sometimes when someone is making their very first budget, they need those parameters put in place. They need some boundaries. They need to get a little bit of a baseline to work from. Before we move on, there are some important notes that we baked in here. Avoid merging cells, adding rows, deleting rows. That'll mess up the calculations in the planner. You can hide rows and columns if you want to, but don't add or delete them. We'll also link the tutorial here. You can email this email address if you get stuck. White cells have your formulas, and then there are just a couple other little notes that I'm actually going to go through with you here too. So the next thing that we need to do is plan our regular monthly spending. In this process, you have some options here. If for some reason a item that you need is not listed in one of these drop-down menus, no problem. All you have to do is select this little pencil, and it's going to show you these options. You can change them right here. You can add more items. You can edit these however you want, and it's going to filter through to the rest of the planner. Same with these broad categories. So say you don't have pets, or maybe you don't have children, or you don't have really family expenses. Maybe you don't have self-employed taxes, right? You are able to change those broad category titles by just writing over them. So if I wanted to make the transportation category something else, I could change the name. It would filter through, and then you can change the drop downs. But we tried to use things that we feel like are very common for families and for young professionals. And so you have the option as you're going through to pick from these items. So let's say maybe we have rent, that's $3,000 per month. Maybe we have cleaning, that's $250 per month. Maybe we have water, that's $50 per month. And maybe let's say we've got gas for $75 per month. Maybe we've got, some car payments that are $400 per month. Maybe we're spending $200 per month on car insurance and, 75 on gas. So we're going to go ahead. And the idea here is that you are setting your spending plan. I'm going to not do taxes for the self-employed. But as you go through, you can select these items, choose your own, and then set a goal. Really, this is like, hey, if everything goes according to plan every month, this is how these categories should shape up. You're going to go through, do each one. I'm going to be a little bit annoying here and just delete these pre-filled ones because they bother me. If you find that, hey, I actually want to move some things around, like maybe you want more space for food and less space for pets, you could actually just swap the two. That's fine too. All right, so once you do that, then you're going to come down here to non-car and home debt. So this is not mortgages, this is not car payments, this is credit cards, consumer loans, student loans, HELOCs, medical debt, you name it, right? Medical debt if you're in the US. LOL, live, laugh, love. If you want to add your own, again, feel free. You can just open this category and change them as you want. Add emojis, change the colors, do your thing. Let's say we've got maybe a student loan payment that every month is $250. You're going to put the payment there. What it's going to do then is kind of tell you this is how much you're total planning to spend per month. Underneath that, you've got planned irregular large expenses. These will vary. Maybe you pay your car insurance in 1-year installments. And so you know that you're going to have to pay your car insurance for $800 in June. So you can put that in, and it's going to tell you then when you go to June and you get to June in the planner, hey, remember, this is due this month. So it's going to show you kind of your spend throughout the year. Maybe you are going to buy a new vehicle, very car themed today. Maybe you're going to buy a new vehicle purchase and you're expecting to need $5,000 for that, for the down payment in September. You kind of get the picture. You're just jotting down big one-time expenses that you know are going to happen. Now you'll have the option every month to add different ones if something is unplanned irregular expense so that it doesn't mess up your budget and you're not trying to account for those big expenses in your budget. If you know they're coming, you can add them here. All right, so next thing is we're loading our accounts, our assets, and our goals. We're going to add a couple here. We start with cash and cash equivalents. This is like checking. Maybe you've got a 5% LOL, if only, account, and we've got a savings account, same deal. And basically, from here on out, if you are actively adding money to this account, as in you are contributing toward it for a goal, you're going to select actively contributing. Then it's going to give you the option to choose from it later in the months. So maybe I have a savings account goal and it's associated with this car I'm trying to buy. Now we're getting to qualified retirement accounts. Okay, so I've got my 401k. Then I choose the tax status. It's traditional, Katie, Empower. And yes, I'm actively contributing to this account every month. And the ultimate goal is financial freedom, right? Maybe I've also got an IRA and it's Roth and it's with Vanguard and I'm actively contributing and same thing, financial freedom. Really, in this retirement account section, probably every goal is going to be financial freedom, but you get me. Now, let's say I've got non qualified accounts. Basically, this is going to be brokerage accounts, company equity, RSUs, ISUs, cryptocurrency, you name it. Taxable is pretty much the only tax status you're going to have down here. And maybe this is my house fund, we'll say. So I'm trying to save for a house in this brokerage account. Maybe I have another brokerage account with Betterment and I'm actively adding to it because I'm going to use it for children someday. So it's like my child care future funding account. And then maybe I've got some real estate. So maybe I own my primary residence, it is mortgaged, and I own it. Making this up. I don't even know if they do mortgages, and maybe I have a 6% interest rate. So I have this mortgage primary residence, right? So most people are going to have lots of accounts here, but I'm just showing you kind of how they're going to populate later. And again, if you have a goal associated, feel free to leave it blank if you don't. I have probably 15 accounts that there's nothing associated with them. It's like I'm just dumping money in for the future. This is truly just so you know if you're actively adding more to this account every month that you're going to be able to know in the month, like, okay, I put $600 toward the house or I put $200 toward a vacation, what have you. Now you're going to go to your net worth tab. Everything is going to carry over. So my cash and cash equivalent accounts are here. My qualified retirement accounts are here. My non-qualified accounts are here. And then my mortgaged primary residence and my student loans are here. If you have auto loan debt, you're going to fill that in here. You didn't tell it you have that yet. So now every month, we're starting in December, right? So let's say I've got 5,000 here, I've got 5,000 there. Maybe I've got 50,000 in my 401k and I've got 20,000 in my IRA, and you'll see that it's populating too by tax status. You can kind of keep track of how your asset location is looking based on tax status. And then maybe I've got 40,000 in this account and 15,000 in this account. So you can put your property value in here. And then down here, all right, maybe my remaining balance is 20,000 and I've got maybe 150,000 left on my mortgage. So now I see my total liabilities equal 170K, my total assets 535K, and so my net worth is $365,000. Now the fun part, financial independence. This is the point at which it's going to tell you, based on your current assets, your current spending, your current income, when you are projected to hit financial independence. So this person has $125,000 invested, right? That is across their taxable and their non-taxable accounts. So we've got 120,000 invested, 125K invested, 120K coming in every year. We're going to assume a 3% annual increase in income, a 9% average rate of return, 3% annual inflation rate, and then a preferred safe withdrawal rate of 4%. So this is also a change this year. It used to be kind of default, but you can actually change what your safe withdrawal rate is if you want to be more conservative or more aggressive. And then it's pulling in your estimated effective tax rate based on your federal, FICA, and state tax and your monthly spending. So we obviously only put in some of our monthly spending in this example. It's going to look at all your monthly spending and then increase it. So What's great about this year's edition is that you really no longer have to look down in this table. You obviously can if you want to see how things are playing out, but it's going to pull all the most important information up to the top for you. Years to reach FI, you've got 14 in this case. You are projected to hit FI in 2038. You're projected to have $2 million, and you've got a projected monthly spend of 6,500 bucks. Now, financial independence is the point at which you could safely withdraw this portion of your portfolio and live on it, because now your money is making enough money for you every year that it can support your spending. So we call that financial independence because it means you actually don't need to work for income anymore. Another really cool thing that we added this year is pension income. So if you have a pension and you know that you're going to begin receiving monthly payments for that pension, you can say, okay, maybe in 2025, I'm going to start getting $500 a month pension. That's going to show you, okay, well now I'm FI in 12 years. That just bumped me down, right? It increased your timeline to FI by about 2 years. And if you have any other monthly income expected, that is an exciting change this year. Our first year doing a pension income. So this is kind of the V1 of that feature, but I'm really excited about it. And then one thing to note, a manual change you can make if you are saving really aggressively for a goal that's not financial freedom, like maybe you're saving to send your kid to college and a huge portion of your annual saving is going toward that goal and is not going toward financial freedom. If you want to subtract the annual amount, like this is telling you if you're making this much, being taxed this much, and spending this much, then this is the amount you're saving every year and adding it to that investment portfolio. If maybe 20,000 of that this year is not going to financial independence, you can just manually subtract it from the formula and it'll show you how that changes things. So I would recommend manually changing it year by year. You obviously don't know years into the future how your savings are going to be impacted. Check in with that number, make sure it's accurate. Some people find that what they think they're spending and earning and saving, that it's not actually accurate because they see that number and they're like, "Wait a second, I'm not saving anywhere close to that. What's going on?" There's got to be a discrepancy. Here's our monthly tabs. We're going to go ahead and look at December and I'll give you a little tour of how each tab works. So I'm really excited. I'm going to zoom out a little bit about how this turned out, because last year the monthly tab, that was like a new feature where instead of having the whole year on one screen, we broke it out into monthly tabs. And I think this is a huge improvement on last year's version. It's much tighter. So everything kind of fit. You barely have to scroll to see everything. But you have this frozen bar across the top. It's going to show you your assets, your liabilities, your spending year to date, your save rate year to date, and your percent to financial independence based on how much you've invested now. So in this example, we're 17% of the way to FI. It's going to tell you the percent change month over month. So, like how your assets have grown between 1 month and the next, how your liabilities have changed between 1 month and the last month, your spending and how that's changing from the previous month, and your save rate overall. So, let's say I've spent 2,500 on rent. Maybe I got a break. Who knows? I spent 200 on cleaning. Maybe my water bill was more expensive than usual, and so is my gas bill. So I've spent that much. I've made both my car payments, I paid for my insurance, and I paid for all the gas I needed to buy. So right away, you can kind of see this is starting to break down. Maybe I've made my student loan payment, and you can see I've got transportation is 17% of my spending, housing is 75%, debt is there. And it's already telling me, all right, average spent per month, 38.05. This month's save rate is 0. Haven't saved anything yet. And maybe I've got my primary job income is 5,000, and I've got one more piece of income from a side hustle that's 1,500. All right, so I've got $6,500. Now that I've input my income, it's telling me, cool, so your save rate this month is 41%. Of all your income, you've saved 41%. So these numbers are going to start updating. Maybe I need to make my savings now. So perhaps I have contributed 1708 to my 401k. Maybe I got a $400 match. And maybe I also tossed $500 into my Roth IRA. So as you'll see, the accounts that are populating here in monthly contributions, these are the accounts that you told it you were still actively contributing to. So you can see the account name, the goal associated, and you can start to fill those out. So again, my average monthly savings, 2608, I've put in this much to date. So after you fill out a couple months, these numbers start to look really, really interesting because you start to get the sense for like your overall averages and your like overall save rate. So it kind of smooths out the bumps if you have some months where you're spending a lot and others where you're not. And it kind of gives you that like big picture view. And maybe I had an unexpected expense. Maybe I had to buy a MacBook because my computer died and it was $1,200 and I used my checking account to pay for it. And maybe I'm like, yeah, I do want this to be included in my budget. So that is going to count that $1,200 toward my spending for the month. Now you can see here's my planned spending for the year based on my regular and irregular expenses. Here's my actual spending so far in December. And maybe I say, you know what? Actually, I don't want that included in my budget. You'll see up here the spending year to date changes. It basically just allows you to say, this was such a big one off expense that was like planned for, or maybe other money was used. Sometimes you have expenses that you don't want it to skew your year to date data. So you have that option to kind of turn it off or on. But regardless, it's going to be reflected in your charts. So you can see how you're tracking against that line that you kind of expected. And then your saving and investing will also begin to populate. And like we said, we planned for an expense in September, I believe. So, or was it August? Let me see. I got to go. Oh, yeah. So here's June's car insurance. This is your expense that you planned on, the amount that you planned on. And again, here's that little bump in June. Every month you'll fill this out. It really doesn't take long, but it does build a very robust picture of your finances as you go. Here's our pie chart breakdown. I'm also noticing this little category guy. Like, this is also a new feature this year. So I'm like, okay, good thing we have 2 months to figure that out. But it's going to start to show you how your different categories, savings and debt pay down, broke up for the month. Ideally, you're going to do this every single month, right? For 12 months because you're a diligent rich girl, you're filling it out. And then finally, at the end of the year, you're going to get to your full year end review. So these insights are going to populate for you after you fill it out, and you can look at it in the view of last 3 months, last 6 months, last 12 months, the full year view. Now, because I'm starting it in December, but today is actually September, the previous 3 and 6 month views are kind of funky. The full year view is showing up for me because it's including all of it. So it's going to show you your income versus spending over time, how your margin looks. It's going to tell you your average spent per month on these categories, kind of the overall goal you had. Okay, I was going to spend $30,000 on rent. Maybe I'm going to spend $250 per month, right? Because it's taking 1 month over 12. But like, again, once you have the full year filled out, this will be accurate. And then it's showing you your saving and investing breakdown. So kind of like which accounts got the most love. It is going to tell you how your irregular expenses changed. It's going to show you your net worth breakdown, and it's going to show you kind of where your money went. So your average per month in each category, as well as these overall big numbers of like total income for the year, total spent for the year, total saved and invested, how your net worth changed. It thinks we lost a bunch of money because we only filled out 1 month of money, and then everything else looks like zeros. Then you're going to have your trends and insights down here. So it'll tell you which category you went the most over, which category you were the most under budget, your highest spending month, your highest saving month, your category with the most volatility, your top investment account, as in the account that you put the most money into, and then your percentage of irregular spending, kind of as a percentage of the whole, and then your highest debt paydown month. So you get a lot of nice insights from this view, and maybe I'll fill it all out and then come back so you can see what it looks like when it's all filled out. That's kind of how this ends up getting powered. And the idea is that your data that you input all year long is then going to surface up interesting insights to you at the end of the year that you can then use to make changes moving forward. And once you've got like 3 months of data, it starts to look interesting. By 6 months, you're really cooking. And then when you have that full 12-month view, it's extremely satisfying. So I'll have some screen grabs of what it looks like when it's fully filled out. But yeah, that is the 2024 Wealth Planner. I'm really excited about this year's version. I think it's really, really strong and kind of builds on a lot of the progress that we made last year.